every time when budget is round the corner, budget is also about taxes. We tend to discuss from a stock market side the importance of rationalization of taxes. In India, just to break it for our viewers, we've got different tenure and different tax rates. Different tenure if you're holding in equity, debt, real estate and gold. Similarly in India, if you are trading in FNO, different tax rate. If you're holding for more than 1 year, different tax rate. If you're holding for less than 1 year, different tax rate. Market nervousness, Madhu, perhaps is valid because the tax regime is different. There are two ways in which things could happen, and I'm just going to project it for our viewers. The short-term rates in India are 15%, long-term is 10%. If the short-term rate is changed in proportion with business income, will that be a negative news for the market?
So Nikun, let's first look at it. You be in finance minister situation. Capital markets have enabled raising of 6.5 lakh crore rupees of equity in the last 3 years, right? I would urge and pray that these things should not be disturbed, at least this year, because everything is going well. Capital market is helping revive the economy. Revival of the economy, given the global context which we discussed, is very, very important. So I think any meaningful distortion on the capital gains tax regime may not get government significant revenue boost up, and as we discussed, it is not even needed. If they get 10,000 crore extra, that is not even needed. So I think this thing can wait, and it should wait, right? There is a merit in rationalizing the taxes, but should it be done this year is my point. I am saying that logically speaking, given the context that markets have also become nervous, given the context that there is talk of global recession, and we need very healthy capital markets, it should not get distorted. Having said this, if the time frame changes, let's say it long term goes from 1 year to 2 years.
That 1 year becomes 2 years.
2 years. I don't see a meaningful impact on the markets. But let's say if you change the short term capital gains
this one here,
to business income, let's say you club it with the business income slab, then I see a very meaningful impact on the markets.
So again, Mr. Kela is making a point that there is need to have versus good to have. Now you can argue that the short term, the capital market, capital gain should be changed, but that's good hygiene as per global standard. But the need to have is clearly not there given the global backdrop. There is no desperate need to raise taxes, and this also does not tally with the Prime Minister's vision of financial inclusion, because the SIP culture in India is just about picking up. You need a vibrant capital market,
and we have lived with it.
Exactly.
We have lived it for last 50 years.
Exactly.
In 1 year, nothing is going to change.
Exactly.
But this year is very crucial for India, for us to be able to differentiate from the world
and take that leap forward.
Take the leap forward. So this is, and I expect, I am sure government is more will recognize it more than what you and I can discuss.
Of course.
That this year the economy, the people need support. They need growth push. So they will optically utilize this 2.5 lakh crore rupees of buffer which they have, and make sure that the sentiment remains very positive. So I feel that there will not be very large tinkering on at least on the short-term capital gains tax.
Okay, and just to supplement that point, that in 2022, calendar year 2022, we've seen record outflows by FIs, but record flows from SIP investors. So it's the equity domestic field which is chugging, and when an asset class is getting created, you need to incentivize it, and that incentive in a sense is something which really needs to be protected.